Ordinary and preference shares. Key features and rights. Exploring the distinctions and implications for investors. Agenda. Introduction to ordinary shares. Overview of preference shares. Forms of preference shares. Comparison between ordinary and preference shares. Impact on investors and companies. Introduction to ordinary shares. Definition and characteristics of common stock. Ownership stakes. Ordinary shares provide shareholders with ownership stakes in the company, allowing them to participate in its growth. Claim on profits. Shareholders of common stock have a claim on residual profits, meaning they benefit from the company's success. Rights and governance. Common stock shareholders possess certain rights that affect corporate governance, including voting on key company decisions. Variable dividends based on company profits. Non-fixed dividends. Dividends for ordinary shares are not fixed and can vary based on the company's profitability and financial decisions. Impact of company performance. Shareholders receive dividends that reflect the company's performance, influencing their returns on investment. Board decisions influence dividends. The board of directors make decisions about dividend contributions, impacting shareholders differently. Voting rights of shareholders. Shareholder voting rights. Ordinary shareholders have the right to vote on important company matters, emphasizing their role in corporate governance. Board of Directors elections. Shareholders participate in electing the board of directors, influencing the company's leadership and strategic direction. Approval of corporate actions. Shareholders can approve major corporate actions, giving them a say in significant decisions that affect the company. Preemption rights in share issuance. Understanding preemption rights. Preemption rights allow existing shareholders the opportunity to purchase additional shares before they are offered to new investors. Protection against dilution. These rights protect shareholders from dilution of their ownership percentage when new shares are issued. Implications for shareholders. Understanding preemption rights is crucial for shareholders to make informed decisions during new share issuances. Overview of preference shares. Fixed dividends paid before ordinary share dividends. Priority of preference shares. Preference shares are prioritized for dividend payments, ensuring they receive returns before ordinary shareholders. Reliable income stream. The fixed dividends from preference shares provide investors with a more reliable and stable income compared to ordinary shares. Investor benefits. Investors in preference shares benefit from reduced risk as their dividends are paid before ordinary dividends, offering financial security. General lack of voting rights. Nature of preference shares. Preference shares typically do not provide voting rights to their holders, limiting their influence in corporate governance. Impact on investors. The absence of voting rights can significantly affect investor decisions, particularly for those concerned about governance. Corporate governance dynamics. Understanding the dynamics of corporate governance is crucial for investors, especially when voting rights are absent. Activation of voting rights if preference dividend is in arrears. Voting rights activation. Holders of preference shares may gain voting rights if dividends are in arrears, providing them more influence. Investor protection. This provision offers protection to investors by ensuring they can influence decisions if payments are delayed. Dividends in arrears. Dividends that are unpaid can trigger the activation of voting rights for preference shareholders. Cumulative preference shares. Rolling over dividends to the next period. Forms of preference shares. Definition of cumulative preference shares. Cumulative preference shares are a type of equity that guarantees the payment of unpaid dividends to investors before ordinary dividends are distributed. Accumulation of unpaid dividends. Unpaid dividends on cumulative preference shares accumulate over time, ensuring that investors receive their entitled payments before any other distributions. Investor Safeguard Feature. This feature acts as a safeguard for investors, ensuring they receive their dividends even in financially challenging times for the company. Convertible preference shares. Rights to convert into ordinary shares. Conversion option. Convertible preference shares provides investors with the right to convert their shares into ordinary shares, enhancing their investment flexibility. Attractive investment. This conversion option becomes particularly appealing if the company's value increases, allowing investors to benefit from the growth. Participating preference shares. Opportunity for further dividend. Additional dividend opportunities. Participating preference shares allow holders to receive dividends beyond the fixed rate, enhancing potential returns. Benefits from company success. Holders of participating preference shares can benefit from the success of the company alongside ordinary shareholders. Redeemable preference shares. Issuers' rights to buy back the shares. Definition of redeemable preference shares. Redeemable preference shares are a type of equity that allows the issuing company to repurchase shares under specified conditions. Issuer's rights. These shares grant the issuer the right to buy back shares, providing financial flexibility and strategic options. Investor certainty. Investors benefit from knowing their shares can be redeemed at predetermined times or conditions, enhancing investment security. Dividend distribution hierarchy. Preference shares. Preference shares receive dividends first during profits distribution, providing more security to investors. Ordinary shares. Ordinary shares receive dividends only after preference shares, which affects their return potential. Investor impact. The hierarchy of dividend distribution influences investor returns and decision making in share selection. Voting rights and shareholder influence. Shareholder voting rights. Ordinary shareholders typically hold voting rights, enabling them to influence decisions in corporate governance. Preference shareholders' limitations. Preference shareholders generally lack voting rights unless specific conditions are fulfilled, impacting their influence. Risk and return profile of each share type. Ordinary shares. Ordinary shares typically carry higher risk due to variable dividends. However, they offer the potential for higher returns and voting rights. Preference shares. Preference shares generally provide more stability and fixed returns, appealing to risk-averse investors. They usually lack voting power. Benefits to investors holding ordinary shares. Capital appreciation. Investors can benefit from capital appreciation as stock prices increase over time, potentially leading to significant profits. Voting rights. Holding ordinary shares gives investors voting rights, allowing them to influence important company decisions and governance. Higher returns potential. Investors in ordinary shares may experience higher returns compared to other investments, depending on the company's performance. Benefits to investors holding preference shares. Fixed dividends. Preference shares typically offer fixed dividends, providing a reliable income stream for investors looking for stability. Higher claim on assets. Preference shareholders have a higher claim on company assets in case of liquidation, offering a dead security compared to common shares. Attractive for risk-averse investors. Preference shares appeal to risk-averse investors looking for predictable income with lower volatility compared to common stocks. Strategic use of share types by companies. Capital structure strategy. Companies utilize a mix of ordinary and preference shares to optimize their capital structure effectively. Equity financing balance. Balancing the need for equity financing with the desire to maintain control is crucial for companies. Conclusion. Understanding share types. Ordinary and preference shares have distinct characteristics that can influence investment choices and strategy. Unique features of shares. Each type of share offers unique features and benefits suitable for different investor profiles and objectives. Investment decision making. Informed investment decisions require understanding the advantages and disadvantages of each share type. Thank you.